Malia, you're on.
Thank you. And thank you, Ben, for taking notes. As a Black Puerto Rican Italian, good luck. But first, I just want to say that this is a really, I mean, what are the words? Unprecedented, crazy, sucks, right? I mean, it's a horrific time. And it's a horrific time with tatters of civil society and, and societal bonds. And, it's such a honor to be here because the work that you're doing is the core, right? It's like the community work that happens because community decides it happens. And that can't be taken away no matter what happens. And I think that's what's so important about the work you're doing and why it's so important. I mean, even just hearing some of your announcements, Nia, this is the work that will sustain, because we've been doing it this way for thousands of years. And, so I'm going to talk a little bit about what I'm doing at the bank and then a little bit about check cashing. And then I'd love to get some feedback. And I know, I don't know how long we're going for. I'm here, I have a bottle of wine. We can get wine, we can get tea, juice, and continue the conversation. But I really do want to hear from you because as Nia said, I'm a community organizer. That's who I am, unapologetically. And being where I am now, which is in a bank, I see as the only way that I can stay sane doing it is doing the most cutting edge work that I can do for the bank, right? So they won't let me give away all their money. I've already asked. But they are letting me do some experiments. And in doing these experiments, I'm hoping to really start creating a positive narrative around dignity in banking and around accessing capital for all, right? And so again, what Ujima's doing and what Maggie's doing and what, the co-op fund has been doing, right, is an example of how we hold this space and we can continue this conversation. So however I can have these conversations in the bank or with the tools I have, I hope to do that. So everyone has my email, we can Zoom, and any experiment, if I think I can sell it to my CEO, I'll give it a go, and we'll give it a try. So with that being said, right now at the bank, the couple of interesting things, so we're doing all the usual, right? Like, oh, vendor, blah, 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 blah. And I don't want to spend too much time on that because we know that, right? We know how to build those networks. I want to spend time on the stuff that's much more difficult. And that's really trying to loosen the ties around capital, especially debt capital, and, the checklists, the institutional and structural biases that sit in those checklists around race, gender, class, right? I mean, we know the story. And so currently, well, I should say pre-COVID, we were experimenting with community underwriting. And we were working with the Runway Project, which some of you may know. Jessica Norwood is actually an old friend of mine. I won't talk about how old, but we started an organization called the League of Pissed Off Voters together years and years ago. And it's wonderful to be working with her on this. And so this was an experiment out in Oakland with Conda, an impact hub out there to really provide funding for the startup gap, right? That friends and family gap. And so we're experimenting. We were experimenting more with that pre-COVID. But what that allowed us to do was once we saw what COVID was happening with COVID, and Shagun, who some of you may know from BECMA, and Grace Moreno from the LGBTQ Chamber, reached out and was like, our businesses are going to need help. We don't know when the federal government's going to respond. Like, can you do something? And thank you, yes, BECMA. Um, and we were able to set aside a line of credit that really mirrors our community underwriting process. So it doesn't have a lot of the same considerations. It doesn't have financial projections. It doesn't have personal asset liability. It has a 600 credit score. And so it allowed us to put that in the market rather quickly. We have that product up in about 9 days. And we're continuing to work with the Runway Project to see what we want to do around the startup capital, right? Because right now making startup decisions, it's fraught with questions. So is there a way to continue to support the startups that we were supporting pre-COVID? So we're having those discussions. What makes that attractive to the bank is that the Runway Project has a CD loan product to it. So even though CDs, especially right now, aren't necessarily the best thing to be talking about, it's a pretty steady investment tool. And so anyone who buys a CD, we're willing to leverage this loan program 2 to 1 for every dollar. So we have about $1 million in, and so we can do up to 2 million in these loans. For the line of credit, we have 3 million right now. But we are able to increase that, seeing on the demand. So that's one example of some of the work that we're doing there. The second thing I'll bring up before I jump into the check cashing is that we're also working with minority deposit institutions. And if you were around our water cooler talk, you may have heard me talk a little bit about the PPP loans with 2 Black banks that we're working with throughout the country. Absolutely, Maggie. And so, see, I wish we were sitting in circles so we could just be like, even though it's great to see your faces, I finally have energy. I've been dealing with PPP all day, you guys. It's great to see you, but I will absolutely give you that information. So the FDIC allows us to work with any minority deposit institution in the country. So I don't have to stay within my footprint in order to support Black or Brown or First Nations banks or Asian banks, which there's a Korean bank that we're supporting right now as well. And so what we're able to do is most of these banks, like the largest Black bank in the country is about $1 billion. And that's One United. And so we are trying to support them in being able to do larger deals. We're also able to support them with compliance guidance up to a certain point, but really trying to help them maintain. And what I'm trying to do there is build this business model to show the necessity of minority deposit institutions. So I know we're talking about check cashing tonight, but if there's any thoughts you guys have on that, like, please let me know, send me an email, because I could, talk about that stuff and get feedback on that stuff all day. So to jump into check cashing, what we see is that check cashing is an $80 billion industry. And so it's huge money. It's huge money because the typical bank, let's call them, and by that I mean banks of 10 billion or more, right? And maybe even smaller than that, but they've given up the unbanked, the unbanked conversation, right? They're not going after this customer. So because of that, this customer can be preyed upon. And we know the story of the predatory piece of check cashing, but there's also a role currently that, yes, the Freedman Bank. And also, if I can just do a pitch, and don't mind, because you guys might see my sweats under this. I'm sorry, I'm trying to. But just to do a quick, can you guys see that, the color of money? I don't know if you guys have passed it amongst yourselves. I can lend this copy to anybody. I can send it over to you. But yes, I mean, we can. Exactly. That history is why this is so important, right? And so the check cashing space is a space that, unless it's unless there's a competition, right? Unless there's a free market to it, there needs to be government regulation to pass it. But also, there are reasons why people use check cashing, not just to be taken advantage of, right? There's a distrust, a rightly so distrust of banks, getting back to the Freedman Bank, and that's there's also, to quote Wanda Sykes, what is it? Some trust has been lost, right? With that, there's also documentation issues. And there, there's, you can do a lot of things there, right? You can cash a check, you can pay your utilities, you can send money to your family. And you can do that all without the judgment of walking into a bank and wanting to cash a check, right? And so those are some of the things that we're trying to take on with a product set that we're working on. And what the product set is looking.
Yeah, I'm going to start off my video.
I'm sorry?
Sorry about that. I thought I was on mute. My fault.
Oh, sorry. I'm like, oh, what happened? Is that we have been able to solve for check cashing, right? So actually being able to cash people's checks on the spot. And the big question about that was, again, fraud. But now with technology, we're seeing that come in. The second thing we're able to do is a form of payday lending. So you may also have seen some of the fintech folks now, right, where it's like, sign up to this and you can get your paycheck 3 days early. Like, so now there's fraud protection and stuff around that makes banks and compliance and the FDIC comfortable doing that. I am trying to solve for the Western Union aspect of this product line. So if folks also know of good models and some good fintech models. And I think I'm gonna end with fintech for a second and then open it up to conversation, Ian, unless there's anything you want me to specifically get on. Fintech is a game changer. And like most game changers, it's as dangerous as the person's whose hands it's in. And so when I was at CoCap, which is like even the more progressive SoCap in Cali, there was a lot of concern around the predatory nature of fintech. And one of the interesting things is that Cabbage, which is backed by SoftBank, which just took a huge hit with the WeWork IPO thing, they jumped into this PPP space quick and just started to like grind out SBA lending. And, literally 2 days before COVID, people were writing about some shady dealings. So, fintech isn't necessarily regulated in the same way. So I do think when we're looking at check cashing and at other predatory models outside of the natural predatory nature of the banking institution, I think it's important to also look at fintech as something that could come and actually be as harmful as it could be helpful. So I'm going to stop there and chit chat. PPP is I forget what it actually stands for, but I've been saying PPP so much, but it's the pot of money in the CARES Act that came out of the federal government that goes to the SBA. So, and banks lended it out. So that's what's been causing me to drink for the past 10 days. Because you always
Thank you. Thank you, Mel. So one thing that I will ask you to touch on really quickly if you want to, because I know you'd mentioned this at the BECMA Solutions event in February, and then you were talking about this a little bit when we spoke last month, just kind of like on the experiment that you're figuring out with the check cashing. I believe you were kind of talking about a mobile ATM. Do I have that right? Are you still thinking about that, or have you?
Yes.
You moved on from that? Okay.
So being an organizer, I think narrative and action is important, especially when it empowers people. And coming from a bank, it's an interesting place to be trying to figure this out. And so one of the things that I want to do is when we launch this product, actually have mobile ATMs in front of check cashing. so that we're able to check, to cash people's checks, to do payday loans at a much smaller percentage. The average check cashing person gets charged about $500 a year in fees. And as we know, the average American family doesn't have $400 to scrape together for an emergency, right? So I think we could help a lot of families out just by charging them the same fees we all get charged if you bank with a, with a bank or a credit union or what you may have. But so, yeah, so you'll be seeing those around town, although who knows, I mean, will we be seeing things around town? I don't know, but the plan pre-COVID was to get these mobile ATMs. Let me also just a plug, if we ever are able to get back together again. What this strategy is based on is space. And so we've opened this community space in Dudley. It's called Revex Labs, and it's free co-working space for for residents, and we partnered with the accelerators like Commonwealth Kitchen, Smarter in the City, the Fairmont Innovation Lab. And so, a lot of what we also want to do is be able to be a physical presence to help work with folks on really trying to figure out, what does banking everyone with dignity actually look like.
Thank you, Malia. And I'll open up the floor, and I see Jam raised his hand. So we'll start with Jam, and then I'll just say, just jump in with any questions or comments you all have. But let's start with Jam.
Well, Malia, thank you so much. This is new information from, or a new world. So I wanted to start with your statement that it's an $80 billion industry. Does that mean that there are X number, millions of people who are cashing their paychecks sort of through this non-banking system, and that the aggregate annual amount of all that money is 80 billion?
Yes. And just to put some numbers on it, on how do we get there? First of all, the fees are exorbitant, right? So that.
Well, yeah, that was my next. So what percentage of that gets clipped?
Right. But if you look at the Black and Brown community, broad stroke, right? 50% of that community is underbanked compared to 19% of white people. So we're talking huge numbers, and what makes this about race and not necessarily about class, right, is that if 19% of the white community is underbanked, I know that that's not the class breakdown of the white community, right? So that lets me know that, you have your high net worth individuals, sure, right? Boom, boom, boom. But there's a lot of working class white people that are properly banked. And about, banking the underbanked, or the numbers are there because of the racial and structural things. It's one of those places where I think I can say comfortably that class maybe plays some in that 19%, but not as much as race does.
Yeah.
Or status. I mean, that's the other thing. One of the things that we've been talking to the FDIC about is, what they're thinking around allowing banks to bank people without documentation. Again, if the FDIC allows us to do that, we can do that. Right? But when you're a publicly traded company, you can't. So, you need the FDIC to tell you, okay. And I think that there's a lot, what I'm finding out is there's a lot of things we can actually do if we're willing to ask, and then take a sip of water in that awkward pause and wait for them to tell us no.
Malia, I appreciate that last point. Thank you. So I'm reminded, I'm thinking about a couple of things at the same time. So what you've just said, I think uh, came out of the conversation that we had last week. So last week, we spoke with Andy Posner from Capital Good Fund. I'm not sure if you're familiar with them. And he doesn't, or I should say, they don't have a check cashing product. So really, they're more in kind of like the just better payday lending, or I won't say payday lending, but just better kind of like micro lending space. When we so then we kind of got to a part of our conversation where we're just kind of speculating on what ethical check cashing would look like. And what he said was, you know, really, if you do kind of want to do ethical check cashing and do it right, he was basically saying a company like his wouldn't be the one. It would be a credit union or some other bank. And I think this is making me think, but they just don't do it. So I don't know if you have any type of insight into that. So into, you know, this is something credit unions and other institutions actually could pull off, but they don't do it. First part. Second part, this is pure speculation at this point, but I'd be interested to hear how you would speculate on this. I'm thinking of the trouble that the post office is in now. And I know that a big conversation that's been revived, it's an old conversation, but it's been revived probably over the last 10 years or so, is post office thank you. And so I'd be curious about just like your speculation in terms of experimenting into whether this time is kind of right. For example, for thinking about like a partnership with the post office or something like that.
So wait, I'm thinking about the post office, but what was the first? Oh, credit.
First one was essentially
unions.
was, you know, institutions could be doing this. They're not.
Yes. So
Yeah.
yes, right. And I want to talk about, yes, and there's many reasons why they may not be, right? So, you know, to use like this PPP as an example, right? Like a lot of banks weren't doing it, you know, and you heard a little bit of the water cooler talk, you know, but there was another side to that as well, which is when, you know, a bank's model, especially if you're regulated, is regulated by the Fed, right? So you can't necessarily loan out X amount of dollars if you don't have X amount of liquidity, right? Like there's these capitalist algorithms that I'm learning that, you know, set these rules that we have to like abide by. And, you know, and this is, I think redlining is like a really good example of like a government regulation and banking, you know, mess up. Didn't use an F. And so, you know, I think the same thing can happen here. But also, you know, when you look at credit unions, when you look at especially smaller banks, their wiggle room is so small. You know, they get a couple of bad deals and they're done. They're done, right? And so, you know, like, I mean, last year we wrote off, and, you know, it's in our AK, this is all public, but, you know, we were a part of that crazy payroll thing, and we had to do a $16 million write-off. Now we're a $14 billion bank. That killed us. 16 million, right? Like, so the way the rules are set makes it difficult for smaller banks to take risk and make it unnecessary for larger banks to take the risk. They, you know, because at the end of the day, like, Bank of America can take hits of bad loans way more than than a community bank or than a credit union. And so, you know, that I think the conversation really needs to sit around, what can we do to encourage these banks to flow capital, right? To actually take this on, because regardless of, you know, 2008 and all of that stuff, like risk, banks like to take known risks, right? And so however we can mitigate that is what's helpful, you know, like allowing banks to work with any minority deposit institution. That means now that I can go to, you know, I can go to my bankers who are like, who, you know, who's the like light-skinned girl that's talking all this communist nonsense. And I can say, we can now do banking in any state that we can find a minority deposit institution, right? Like we just have to work through the minority deposit institution. They get their cut, we get our cut, the community gets banked, basta, right? Like, so regulation can help us do more. And then also having it actually lead to deposits. And so this is something else that I want to throw out because I didn't know this. Y'all may know this. I didn't know this. But, you know, obviously the size of deposits matter. But there is a size of deposit that actually becomes costly for the bank. And so when that whole black bank, you know, bank black thing was happening, and Killer Mike very well intentionally, you know, came out and was like, everyone go to the black bank and like open an account for $100. Like that's a surefire way to kill a small bank, is to give them 1,000 accounts with $100, you know? So I think figuring out not how this fits in the current business model, but how do we change regulations? How do we change CRA? How does this, you know, how do we get more goodwill credit than maybe money, but that helps with shareholder, whatever, you know what I mean? Like however you can leverage to have it be easier, I think is best. So, you know, the more I get in it, the more I'm like, you know, I just see like, oh, these are hard decisions to make, you know, and I can imagine for a credit union or a smaller institution, they become even harder because they become life and death in a different way.
Quick follow-up, and then there's still the post office question if you want to just kind of go off on that, on
So,
speculation on that.
you
But
know, I
wait,
haven't
just real quick.
even really thought about that. What I love about this idea of post office banking is it reminds me of, you know, back in the 70s, my mother used to be able to cash a check at a grocery store. I don't know, like, and I'm from Hawaii, so that may have just been a Hawaii. No, did you all have that? Like, you know, there's something about being able to access your money in different ways. And I think, you know, we're figuring them out technologically, which is great. You know, but why not have the post office as a part of this part of civil society and civic society? If there's a way to obviously protect the post office, right? Like, and all of that stuff to make sure that these workers who are now becoming bankers, you know, are protected, right? But I think that's a great idea. And, you know, and again, is this a place for, you know, different institutions, right? Is this a place for community banks and CDFIs and right, like how can there be partnerships to again build the community of banking, or the community of the philosophy of exchange of capital as a business model?
And then thank you, Malia. And then just quick follow up to your previous point. And I think I see Maggie said in the chat, banks need to make loans to make money more than taking deposits, right? And so my quick follow up just to the Killer Mike example, could you help us just kind of just understand practically why that would kill the bank? So what does $1,100 account do to a bank?
So every bank has a break-even cost of deposits. And what that includes is, and I think states banks have already, I'm not sure I'm following that whole thread. So I'm gonna, I'm sorry, Maggie. But so every bank has a break-even cost for a deposit, which is also what's making digital so good, because it's reducing the cost of deposits. And so every bank has this cost of deposit ratio. And for, depending on your cost of deposits is what makes a deposit profitable. So, you know, for a bank around our size, we average around 650, right? Like that's the cost of deposits that makes this, you know, close to break even, you know, whatever. And so that's from, so everything we do, so loans are absolutely a revenue stream. You know, but you need to have cash on hand to loan. And so that's what makes deposits so important. Because you can't start loaning if as a bank, you don't have money, right? Because the theory is, I take this deposit, I loan it somewhere, I make money, I throw you a little bit of change, I get a bigger piece of change, and then that, welcome to American capitalism. And that, you know, has very little to do with us going to buy a cup of coffee, but it's how, you know, it's how, what the banking model. And so if I start loaning out more than I have, you have these scores, like these liquidity scores, and, you know, all these exams that the FDIC looks at, and they start flagging you, right? And they start saying, are you a solvent bank? Because it looks like you have way more money out. So if all of a sudden all these loans go belly up because COVID hits, are you solvent in that? And that's the balance between deposits and loans. And there's a whole bunch, you know, you can buy deposits, right? I mean, there's a whole capitalist business model to this capitalist economics. But yeah, that's the basics as I'm learning it. I should also say I've been working for a bank for 10 months.
Thank you so much. Any other questions, comments, reflections
I have
on what
a,
you've heard tonight?
just a general question, and really just going way back to the beginning of, I know you talked a little bit about sort of, you started off saying you were a community organizer. It would be helpful to just get a sense of like what your job is at the bank. I find it very confusing to know, like, well, who's the boss at the bank? And, you know, what does someone who's a chief experience officer do? That, I don't know how to ask it, but that would be helpful.
Yeah, no, yeah. Who the fuck ever? Oh, damn, an F.
I'm writing that.
Damn you, Ben. No. So yeah, so I come out of community organizing. For those of you from Massachusetts, I started Mass Vote back when I was 19 with George Pillsbury, and Cheryl Crawford now runs that organization beautifully. Janice Fine, George, Karen Shiwi, they all sort of took me under their wing, and I realized at that point that my role, like, I'm an organizer. That's what I love to do. And so I did that for many years. I worked for Harry Belafonte for 7 years, and moved back to Boston, went to MIT, and then started my own, well, first I started Future Boston. Anyway, I started my own business, and eventually I started my own business. And the two verticals that I was focusing on were banks and real estate. And I was working with them around not only diversity and inclusion, but how do they actually change their culture to be future proofs for the 21st century, right? So you can't just have, you know, one Black person, one Latinx person, you know, like, oh, do we have, like, you know, the obvious, like, lesbian, you know, it's like you start it becomes so inauthentic. It's like, where's the person in the wheelchair, right? Like, it's just like, it's not you. And so I would really work with these companies. And Berkshire Bank had just hired a new CEO who was in many ways the polar opposite of the former CEO. He's a community banker. That's what he believes in. He believes in that business model. And so he asked me to really create a position for myself. So we landed on Chief Experience Officer because I'm really helping shape a customer's experience with the bank. And doing that in every level. I'm an EVP, so I report directly to the CEO. I'm also regional president, so my P&L is about $1 billion here in Boston that I oversee. And I oversee, as far as my day job, not my regional president's job, facilities, communications, marketing, corporate social responsibility, the development of our digital brand, and the foundation. So I have enough of the bank that I'm able to really shift the culture of the bank, and I have enough of the budget that we can make some changes. So I've done everything from completely change our marketing budget. You know, Ray Bork was our spokesperson, and I really just felt that we wanted to get a fresh, new, we don't have a spokesperson, but our customers are our spokespeople. And because, you know, and I'm able to do things like that because of the departments I oversee. So I don't know if any other chief experience, they're primarily in tech. I don't know if other chief experience have the same thing. But it really, it's a position that our CEO really created for me to help him turn the Berkshire Bank on its head, really, in many ways.
Can I just say really quickly, so I don't know if you saw Malia, but Maggie, I think you were responding, Maggie did this. I don't know if you were kind of responding to all of the things that are under Malia's purview, but I just wanted to add really quickly too. So earlier I said rare combination of community organizing, banking, and you kind of skipped over Future Boston, but also what's a part of that, which I would say makes it even more rare, is Future Boston, Epicenter, Urban Lab, so all accelerator programs for businesses. So which again I think is not common. So really just kind of noting really important, just being able to combine understanding needs of communities, understanding needs of businesses, understanding both of those very intimately, and using that understanding to change the culture of traditional banking. So that's super exciting for sure.
No, it's definitely interesting. And, you know, one of the things that I also throw out to this group to think about is, you know, when I went in, I mean, literally someone was like, oh, did you hear Malia was in banking? And they were like, oh, I thought you were talking about Malia Lazu. And they were like, I am. And they were like, oh no, I'm thinking about a different person. This was a huge shift for me. You know, as I said in my interview with the CEO, like, I don't necessarily believe in capitalism as a model. And I say all that to say that now that I'm in, I see why we don't want to go there. But I'm also I've been really impressed by what I have been able to get done with all the barriers that are being put in front. You know, I have an amazing team and they just kick ass. You know, we decided we were just going to do this. And, you know, we are like, I mean, I have my bankers that, you know, they want to bank people. You know, that they don't want the biggest deal. You know, I mean, obviously they'd like to reach their goals and, you know, all of that stuff, but they get pride in banking a neighborhood, right? Like they get pride in helping people buy their first homes and things like that. And there may be more places for organizers to partner with CEOs that are willing to really do a mastermind, you know, type of partnership, because Richard is the one who is, I mean, he's doing a lot of blocking and tackling for me to do this. And, you know, having good organizers be able to advise willing CEOs could be an interesting business model for us to think about, and Ujima can fund. No, but it would be interesting to think about. Because as you said, organizers are unapologetic in the space they hold. They have to be, right? So to be able to do that in a power circle is hard, but organizers do that. And so, you know, that's what the hell we should be doing wherever we can do it.
Perfect, thank you. So we're at time, but I will just allow space for one more question or comment if anyone has a burning question or comment. Okay, cool. Thank you so much, Malia. I'm gonna stop. Oh, did I see something from you, Maggie?
Yeah, so
Go for it.
I guess my question, and this doesn't have to be answered now, so let me put this out as a thought, is to think about ways to maybe follow up with some of the conversations around post office savings accounts and my comment, which I had very little thought behind it, about public banking, that there are other sorts of banking financial institutions that were devised. I mean, state banks are not federally regulated, so they have a lot more leniency in what they can do. And so I would like to sort of see where that conversation goes a little bit in the future. Not tonight, I have to go make dinner, but so that's all.
Thank you so much. For sure. So definitely Malia will be following up for sure. But Noted, Maggie. Thank you so much. I am going to stop the recording now. Oh, it's still recording. Hold on. Okay.